Mortgages are tricky, and even beyond mortgages, winning with a mortgage. If you don't have that cold hard cash, winning with a mortgage and partnering with your mortgage lender is imperatively important. My friend, my dear friend, one of my favorite people on earth is Jess Uphoff. She is a mortgage guru and is helping all her clients to win on a really big level. Jess, give us a rundown of who you are, all the good, all the bad. We want all those details.
Oh, all the good, all the bad. All right. So Erik, I'm one of Erik's coaching students. I've been coaching with Erik for the last couple of years. When I met him, he said, I can't help you with mortgage. I can help you with leadership. And that is one thing I definitely have needed. So Erik's been imperative and helpful in my business. I run a business. We're located in Denver. We do lend nationally. I operate a fairly sized big mortgage team. There's 17 of us. We originated about somewhere between $200 to $250 million in origination volume over the last few years.
That is a lot.
It was a lot. Yeah. The pandemic was obviously an easier time at that. Last year, we did 200 million in a really hard year, which I'm super proud of our team for. And we're a complete purchase shop. So real estate agents are our main bread and butter. That's what we do, is we take very good care of realtors. And I'm excited to share with you today some of the unique things that we do to help realtors. Today is not an Uphoff team commercial. Today is to add value to the real estate community and the Hatch community, and kind of teach the agents in the community a little bit about some things that they may not be currently capitalizing on. So I'm super excited to bring massive value to the Hatch community.
I love it. And Jess, you are a fantastic leader. I haven't ever worked with you on the mortgage side of things. I feel like you're mad at me for not doing that yet. But nonetheless, here we find ourselves in a situation where multiple offers are now aplenty again. We're seeing competition, and you have developed some really, really great steps that you can advise both mortgage lenders and realtors on how they can symbiotically work together to have a much better experience for their buyers. Walk us through some of the things that you're doing, because I am here to learn. This is Erik is the student. I am the moldable clay. Teach me, oh Jess Uphoff.
Cool. Am I allowed to share? I have a PowerPoint. Is that cool?
Let me make sure. Oh, I didn't know we were going to the PowerPoint. Okay. You are allowed to share.
Cool. Thank you so much. All right. So I want to talk about our current landscape of where we're at right now. So basically, let's think about the landscape of where we're at right now. We have mortgage rates, the highest they've been in 30 years. We have inventory levels. We've got 980,000 units for sale in the entire United States, 40% of which is already under contract. That leaves us with about 563,000 active units available in the entire United States. But what's interesting about that is if we look back to 2000.
Can I just pause for a moment, Jess?
Yeah.
Do you have any good news?
Okay. Yeah, lots of good news. We're going to talk about.
I want to make sure people stick around and know that there's some good news coming.
We're going to talk about what we do with this. Like, how do we win in this environment? And so that's what today is about, is giving people tools to win. But we've got 30 million more households than we had in 2007, when we had 4 million units on the market at that time. So today I'm setting the stage that we are in a multiple offer market right now with interest rates in the 6s. And we also expect interest rates to come down because inflation is coming down. So as interest rates come down, demand will go up. For every 1% reduction in interest rate, 5 million Americans enter the housing market. So we can only imagine that it's going to be getting more and more competitive and more multiple offers across the entire United States.
Jess, we're seeing the Andy's saying they're seeing the presenter slide on this here. If you just want to go the full screen mode, that would be perfect.
Okay.
Thanks, Andy.
Full screen. All right. This is not my forte. I'm definitely not a.
Yeah, Jess and I aren't the tech experts here,
we're not.
but
We're not.
we can
I'm good at loans. So I'm going to just leave it like this, if that's okay. Is that
Yeah,
cool?
that's fine.
Okay, cool. So what does it take to win in a multiple offer situation? And the title of this class is Winning Through Finance. So I think I don't need to teach the Hatch community how to win a contract from a real estate side. I want to give you new vehicles or new tools to work with as it relates to financing. So there's some things that we're doing on our side that are helping our business partners win in an area that they may not have even known was an opportunity because they're not in their clients' finances.
Yeah,
So
Jess, I want to make sure people understand the landscape in full here as you go through.
sure.
If I rewind the clock back to say 10 years ago, that's when I was in my selling prime.
Yep.
It was pretty commonplace that a loan was a loan was a loan was a loan, and there wasn't all that many different options that were out there. The lending institutions were, at least if it was somebody local, you're like, yeah, that's cool, and you kind of scoff off anybody who wasn't local. But the right lender and the right loan have made such a difference here since the pandemic, especially.
For sure. Yeah, having the right lender, just providing, being like, oh, you're approved for 500,000 and here's your interest rate, here's a lender letter, go find a property. In my opinion, those days are over. That's very transactional. If you think about having very high interest rates, having so much fear about the housing market, and having a limited amount of inventory, a buyer is walking into feeling defeated already, right? And so that lender that's transactional, that's just spitting out a loan estimate, is not the lender that is going to be able to partner with the real estate agent to take them across the finish line and help them feel safe and comfortable. So I definitely think having the right lender partner is such an important aspect to any real estate team.
It is. I'm going to stop interrupting you now.
Okay.
Go with the flow, my friend.
Okay, awesome. So on that same topic, what it takes to win, you need the right team. You need education to our buyers. You need a process, and then we need roles. So the lender, as we were just talking about, is such an important role on your team. I think a lender's role has really shifted as we've gotten into these unique market conditions with high interest rates and low inventory. In my market, Denver is my primary market. My reputation and industry connections are pivotal to my business partners. So, I can pull up a listing of my client that they're interested in, and a lot of the time I know the listing agent. So that's really important, I think, in my opinion, to have some connections and reputation. You need to know that you have a lender that can close. We're doing on average our closings in somewhere between 8 to 21 days. That's like our general run rate that we're doing closings. And every seller, what they have in common for the most part is they want to close as fast as possible. So it's really important that you have the right lender to help you accomplish that. You need to have your lender available on weekends and evenings because that's when buyers are writing contracts. So these are kind of the basic things that you need in a lender. And then you need to know how to refer your lender really well. So if your lender is dynamic in a multiple offer situation, you need to protect your buyer from going with a lending channel like Quicken or something online that you don't have a relationship there, and that lender letter could hurt you in a multiple offer situation. So you need to know how to refer your client really well. You need to be able to say, here's why I use this person, and here's what I think the benefit will be for you. So my business partners, will say, Jessica's team, they can close really quick. It's really important in this market that you can execute a very fast closing, or Jessica's team has a lot of relationships with local listing agents. So there's different value adds that my business partners can give the prospects to make them feel like this is who I highly recommend you go with. You can also look up a loan officer's data. And I don't know that a lot of real estate agents know this, but you can
hold on. I had no idea. I'm not playing dumb here. I literally had no idea you could look up the stats of a loan officer.
Yeah, and let me give you some context of where this could be helpful. So listing agents, you receive multiple offers, right? And your seller's looking at you and saying, which one would you go with? And it's not always price, right? The lender does make a difference. in my opinion. If that lender can't get the loan to the closing table, it's going to obviously be an issue because those other buyers are going to go away once that deal falls apart 2 weeks later. So you can look up a loan officer's data, how many units they've closed year to date. You can actually look at who their business partners are. So I don't have the full thing here, but what you want to see is Erik Hatch has referred Jessica Uphoff 6 times this year. And if you can tell that, then you know, okay, well, I know Erik and he's a big agent and he must really like Jessica. So I know she's a good lender, right? So this data I think is so important for so
How
many.
do you find this out? If I'm a realtor, how do I find this out?
I'll send after this webinar, I'll send to the whole Hatch community or to Rachel the information so that we
thank
can
you.
get
Yeah,
out.
we'll be sure to send that out. We always send out a follow-up email to all of our attendees, and that'll be a really great gift. Thank you for that.
Of course. The other thing I highly recommend is a consultative lender appointment. So our team, we meet with our clients over Zoom, and we do understand that every one of our clients should expect to be competing. Our market is such, we've got about 2,400 units on the market as of the end of April, and we need about 15,000 single family homes on the market in Denver to have a balanced market. So we've got a very limited amount of inventory. So I have to kind of meet with my clients and do that consultation with them and make them feel comfortable, even though I know they're going to be in a multiple offer situation. So being able to just chat with them and understand what their fears are and what their desires are and their dreams are as it relates to buying real estate. And then I also like to kind of prep them for the multiple offer situation and get them, you know, at least as a high level, educated on what that might look like so that we're doing less of that work together when they're writing an offer. I don't want any of this to be brand new to them when we're writing an offer. So I handle a lot of the multiple offer situation data with them in our consultation. I tell clients,
Jess, this is so important because a great realtor should be doing a buyer strategy session before you ever start looking at houses.
correct.
The pushback we're going to hear is, well, what if it's a go show appointment that I get set from my company or whatever else it may be? Well, go to that first one, but then you need to say, listen, I've had a lot of clients in similar situations like yours that have saved weeks, if not months of time and tens of thousands of dollars by sitting down and having a great buyer strategy session with both me and with the lender. And so getting that kind of commitment from somebody by framing it in that sort of way is avoiding all of the losses that are impending. When somebody says I've lost 10 offers with a client, that client's shopping in the wrong price point or they're poorly advised, but either way, it's your fault.
Totally. I couldn't agree more. So I think the agent's consultation and then the lender's consultation, and yes, it's a time commitment for a buyer, but if they're willing to go through the process with both of us, and a lot of people are, they want both pieces of data. We know, you know, we've given them a high barrier of entry and they've gone through both. Okay, this is a very committed buyer to both of us, which I think is really important. So, but we set them up for the multiple offer situation. So I tell clients you have 10 tools in your tool belt to win in a multiple offer situation. And I kind of explain all 10. And then I'll say, some of these are Erik and some of them are me, but I'm going to kind of go through all 10 tools in your tool belt. The more tools you use in a multiple offer situation, the higher your opportunity to actually secure the contract on the property. But if you only feel comfortable, let's say it's a house that you like, it's a 7 or an 8, but you're not going to go all in on that one, that's okay. You could try to give, 6 of the 10 tools and see if you end up winning in that situation. So I run through each one of these things: offering over list price, offering an appraisal gap, doing limited inspection, non-refundable earnest money, escalation clause, lease back agreement, title insurance paid for by the buyer, quick closing, doing a tactic where you actually show a larger down payment than what you're actually going to do because you can verify those funds, and then providing a lender.
Are you talking earnest money there or down payment? You're talking down payment, right?
Yeah. So I meet a lot of clients that have assets equaling about 200 grand in their, between 401k and their investment accounts and stock and so forth. But when I say, how much money do you have to buy the house with? They're like 60 grand, right? My suggestion to them is, let's write a really strong offer and let's write it with 20% down, and we can verify those funds. So we'll actually send your statements in with your offer with Erik. But you and I know that once you go under contract, we can always go back to the $60,000 strategy that we had put in place. So it's basically just showing a more aggressive down payment that we can actually document.
Yeah, that's good, Jess.
Yeah. So these are the 10 tools. This is something that I don't think a lot of lenders are going through. I know when I'm putting clients in my business partner's cars shortly after our consultation, and the business partner says, oh, you're going to have to go over list price on this one and probably offer some kind of an appraisal gap. A lot of times we take on these conversations sometimes before our business partners do, so that then when our business partners are having the dialogue, they're like, oh yeah, Jessica already talked to me about appraisal gap, and I'm fully prepared to have to do that, understand it really well.
My gosh, would that be a huge tool in the tool belt of our realtors that are watching this, to know that they're not the only person delivering a message of this is going to be hard and here's the strategies in which to take. I can't imagine having the that one slice that comes from you and that comes from the realtor. It's just going to slice a lot better with a lot less serration.
For sure. And we do it in a way also that we remove the fear about it, which I think is really important. Having two voices kind of speaking to it and trying to bring some ease to a prospect as they're considering buying a home. And then also just explaining, you don't have to go all in on a property, but when you find the one and it backs to open space and it's in the school district and it's got all the things, you're going to want to go all in on that property. So we kind of also help our business partners kind of prep that client to understand when they should go all in, so that they go super competitive when that right house presents itself. Because with 2,300 homes on the market, when that one comes up, they're going to kick themselves if they don't win it,
Yeah.
Cool. Am I okay to move on?
Keep going.
Cool.
Rock and roll. Hoochie
All
coo.
right. So interest rates, this is obviously a huge topic for all of us. All of our businesses have been impacted by interest rates. As I mentioned earlier, we've had the highest interest rates we've had in 30 years. And we have high interest rates because we have a high inflation. But as inflation comes down, mortgage rates are going to come down. So one of the things that our team is doing is just providing some transparency of the future of interest rates to our clients, so that they feel safe understanding, this is the trajectory of what's going to happen. You can pull data from the Mortgage Bankers Association, the National Association of Realtors. There's a lot of different sources that will show you, projected interest rates are significantly lower than where rates sit today. And we show our clients, this is where interest rates have been. So interest rates went up dramatically in 2022. And this year is a year of decline. Now, it's not like as sharp of a decline that we had last year, but we are going to be coming down kind of slowly as inflation comes down. And we're getting our clients to understand two things. One, the payment and interest rate you buy the house with is not your forever rate. This is going to be a short-term rate.
Say it from the mountaintops, Jess. It's so important that you say that. Oh my gosh.
The interest rate and payment you're buying this house with is not your forever rate. And so we show them, here's what your monthly payment looks like with your current interest rate of, say, 6.5%. And this is what your mortgage payment would look like with a hypothetical refinance at 4.5% or 5%. So we're basically showing the client today's payment if you want to eat ramen noodles and live kind of on a tighter budget. And then here's your monthly payment once the market goes back and we settle into a more normalized interest rate environment. So that's one topic that we talk about with this data. The next topic is we like to teach buyers what's going to happen to the market once interest rates fall, as I mentioned earlier. So I teach clients that 6.5% is the threshold nationally, where when interest rates fall below 6.5%, that's when we see a huge uptick in buyer demand. So that's when we start to see more buyers entering the marketplace, and that results in more offers for every given listing. So if we can teach our clients, you should try to buy a home before interest rates fall, you actually are going to get the house for a lower cost than you would if you end up in a multiple offer situation with an interest rate in the 5s. I think a lot of consumers have been waiting on the sidelines for interest rates to come down, which if I can kind of teach them that that tactic is actually backwards from the way they should be looking at it, because that refinance will right size your mortgage payment. But if you've had to pay 50 grand over list price because you have 10 offers on a house, there's nothing to right size that,
Yeah,
right?
your house is the sales price no matter what you do.
Exactly. Exactly. So don't look at it from an interest rate perspective. Let's look at it from a price perspective. So kind of teaching the client that the interest rate and the demand is going to drive the price of that home. So, and showing them where buyer demand picks up, I think is really important. So we create urgency for our business partners. We do a consult with a client. They're a little fearful and trepidatious about the market. And through our consultation, we make them feel more comfortable. And we also create a sense of urgency for our business partners, where I think other lenders, with the way they've been very transactional, kind of get people just, okay. And they put all of the responsibility of feeling comfortable and educated on the agent. And I think that's a real disservice to our business partners, because they need our help more than ever, since we hold the financial tools to make the client feel more comfortable.
Yeah. Well stated.
Top analysts predict that interest rates are going to come down due to inflation. We talk a lot
Just so we always try to make our content as evergreen. That's going to be here for forever to stand the test of time. When we're dealing with interest rates, that changes within each day. But the Feds just came out and they were raising some rates. What does that mean in today's? It's the 9th of May, 2023, as we record this.
Yeah. So yeah, we have, just to give you some context, the Feds have been raising the federal funds rate. So every time you hear in the news that there's been a rate hike by the Federal Reserve, they are not hiking mortgage rates. They're hiking the federal funds rate. So that is a lever that they use to slow down the economy. So the reason that the economy kind of got so hot and we had high inflation is that we had the cost of borrowing money for so cheap for so long. Americans were stuck at home. They couldn't travel due to the pandemic. They had additional cash from getting stimulus money from the government that they stuck in savings. Then they got additional stimulus money, and then they started just spending. Money was cheap. They could buy houses and get HELOCs and buy toys. And, you know, with all of the purchasing that was happening in the United States, we got a very high level of inflation. And then the Federal Reserve noticed this a little late, in my opinion, and then started doing these rate hikes to bring inflation down. We hadn't moved the federal funds rate by 0.75% since 1994, and we hiked the federal funds rate 4 times by 0.75% last year. So it's almost like we were driving down the highway 100 miles an hour and we recorrected really fast. So it'll be really interesting to see. We haven't even felt the effects of these rate hikes, in my opinion, yet. And there's been, in addition to the 4 that I just mentioned, there's been others too. So we're sitting right around 5% now with the federal funds rate, when we were at 0 during the pandemic. So we've increased that federal funds rate by 5%. And basically the reason we're doing that is to slow the economy down and bring inflation down, which is working. So the inflationary data that has been released most recently over the last several months has shown inflation coming down. Tomorrow, May 10th, a lot of agents might know that this is like this day that everybody is waiting for on bated breath for April's inflation data to come out, because it was thought to be very impactful to inflation and therefore to mortgage rates. Although recently, some of the projections have shifted a little bit to not look quite as favorable, but it will be interesting to see how the CPI report comes out tomorrow. We get clients more comfortable with the interest rate 2 ways. Again, I show them a presentation where here's your current monthly payment, here's a proposed monthly payment with the refinance, as I mentioned. And then a lot of lenders are doing this now, but we're offering our clients an 18-month window to refinance their loan for free, 0 cost, no lender's fees, title fees, appraisal costs, etc. So it's like, we're only going to have you pay closing costs once. And it does make people feel a little bit more invested and like, okay, this isn't so bad. I'll be able to refinance and it won't necessarily cost me additional.
Now, are there any asterisks on that, Jess, that says like, all right, if you're locked in at 6.5 and it goes to 6.25, it doesn't make sense to refinance right now? Is there like a gap that they have to fall within?
No, the only asterisk is we do want them to wait for a handful of months in the beginning, just due to like the early payoff thing that happens with lenders. And then we give them a credit that's up to 1% of their loan amount. So, my average loan in the Denver market is about 500,000, and the cost of a refinance is somewhere between 3 to 4. So for most loans, that should cover all of the closing costs associated with the loan and then some.
I understand. Thank you.
Yep, for sure. I did put a presentation together. I have a lot of material to go through. So I can send this presentation with the other data I had mentioned earlier, and people can click on this link just to see, here's your current mortgage payment, here's that refinanced payment. And I'd like to move on to appraisal gaps, if that's okay.
Please.
Okay. So appraisal gaps are this is one thing, Eric, I'd be curious, how do you and your team talk about an appraisal gap with your clients?
You have a couple things popping up there in the corner there, Jess. So when it comes to appraisal gaps, our market has not been the majority of the markets. Our properties have gone for 3 to 5% over the asking price. We've seen up to 10, but really it's been 3 to 5% is where we've lived. And so we've simply encouraged our realtors to coach our clients on letting them know that that appraisal gap coverage is confidence in where the market is going and an investment in this being a long-term play for them. Getting in with a time right now. Here's the language that we use. If you buy today and rates stay the same, you win. If you buy today and rates go up, you win. If you buy today and rates go down, you refinance and then you win. And so we don't ever tell somebody, yes, you should offer an appraisal gap coverage. We simply say, here's the risks and here's the rewards that are associated with it.
Okay, cool. What I have found with a lot of agents is the way they define an appraisal gap to a prospect is if the house does not appraise, let's say we offer an appraisal gap and the house does not appraise for what you've offered to pay, you just have to pay the difference in cash. Okay, I think that's like how most real estate agents explain it. And I think as a consumer, that language feels scary to me because I already feel like I'm parting with, my entire life savings to purchase this home potentially. And then, let's say it's a $25,000 shortage on appraisal. When I add that to the $60,000 that I've thought, hey, I'm going to put this into the home, it feels out of reach for me. It feels like, okay, I feel deflated already. I haven't even written an offer on a house. And it definitely, the way that I think a lot of agents are explaining that to consumers makes it feel really scary. So one advice I give realtors is try to explain it differently and put it on your lending partner instead of you taking it on, because they have transparency in the client's finances. So how I explain an appraisal gap is I say it's a contractual promise to not renegotiate the price after appraisal. And you should talk to your lender to see if it has an impact on your monthly payment or the amount of cash that you have to bring to the table. So it just feels different because a lot of times there's zero impact to the loan where they do not have to pay the difference in cash. And so I think it's really important that we don't scare them and tell them you have to pay the difference in cash if that's not necessarily the case.
Say that one more time. Use that language one more time, because I think some people are going to want to write that down.
Yeah. So an appraisal gap is a contractual promise to not renegotiate the price once you get your appraisal. So basically, you're going to pay the price that you agreed upon, and you are not going to try to renegotiate the price when you get your appraisal. And you're going to want to talk to your lender to see if the shortage on the appraisal is going to impact your monthly payment or your cash to close.
Because there's a chance that they can just alter and change the amount of money they're putting down, right?
Yeah, so this is another thing that we do when our business partners are writing an offer on a home. I'll just share with you a presentation that I've built here for one of our clients. But when our client is writing an offer on a home, what we do is we show them, okay, here's you writing an offer at list price at $625, and your monthly payment is $39.37, and your cash to close is 90 grand. So we always back our way into, the client says, this is, I have 90 grand to work with, or what have you.
Mm.
And so we can basically show them, this is the house appraising at list price. So this is you offering a $50,000 appraisal gap. So we've done a gap down to list price. Their monthly payment is going up a little bit, and their cash to close is going up a little bit, but it's going up by about 7 grand. It's not going up by 50 grand. So you're right. You can kind of shift the allocation of their funds.
Mm.
And so it can impact them differently than saying you're going to pay the difference in cash, because a consumer is thinking, I'm going to pay the 90 and the 50. I'm going to pay 140 out of pocket. Where I think that, you know, again, if you put it on your lender and you have a good lending partner that can help take the fear away from them, that they can kind of see, here's what it looks like.
It's clear to me that with that breakdown, and everything can be answered with math, right? You're saying, what most people are saying is, all right, you got to cover 50 grand extra out of pocket. That's how most realtors and lenders are communicating an appraisal gap is,
Correct.
if you agree to the 625, 675 difference there, that 50 grand, you're going to have to come up with out of pocket. Your actual cash out of pocket was only a $7,000 difference.
Well, and going back
But
to
it changes the loan terms.
yeah. And the $7,000 difference, Eric, was actually, so this was list price, and this was going in at 675. This is before the appraisal gap. So they are
Okay.
coming up with 7 grand more, and their monthly payment is a couple $100 more. But then look at this. This is going in at 675 and offering an appraisal gap. Same interest rate, really close monthly payment, like $20.
Mm-hmm.
Same cash to close. So look at appraisal gap of 50 grand, having, you know, no impact on cash to close, and a $20 a month impact on monthly payment. Very different than saying you've got to come up with 50 grand.
It's very, very different.
Right. So I think it's about having the right conversations with these prospects that make it less scary, and kind of explaining, you know, this is how it could look if you wanted to offer that gap. So we back our business partners by showing our consumers this data, so that the consumer feels more invested in the opportunity to offer a stronger offer, and by giving our prospects the data to feel comfortable with it.
Yeah, that's really smart, Jess.
So I think appraisal gap is something that is going to happen in every market, will be an imperative just component of every offer. And so I think just kind of changing the narrative there is really, really helpful.
Yeah, really beautiful.
Cool. What else should we talk about, Eric? I have a whole presentation here of what are some things that you think are critical for us to talk about while we're together today.
So there's a question from one of our viewers right now from Andy. Andy is down in College Station, Texas. He says this, he says, not all lenders are created equal, but not all agents understand that. Any tips on how to sell our offer with our lender when the listing agent may not know that they should care?
Oh,
how do you get that listing agent to understand that they're dealing with a superstar in Jess as opposed to a dud in Frank?
yeah. I think you could share, when you write your offer and you have your cover letter, you could share a couple bullet points about the lender. And let's say it's a lender that's on a really great team. Like I have some originators that are on my team and they service my business partners and clients. They could use our team data and some bullet points about our team. They're one of the top 3 teams in the country, or in the Denver market. And, you know, Jessica Uphoff is one of the top 25 female originators in the United States. Like any data that you can use in your cover letter to say they are superstars. The other thing is you could sign up for that service where I showed you the data, and you could share, hey, Andy's lender, Jane, has done, 50 transactions year to date, and they've done 15 together as a team. I think it's a really strong point to a listing agent when you can see a lender and an agent working together over and over again. That means that they have a track record of success.
Yeah. That's really solid. I haven't shared this with you, Jess, but it's one of my favorite hacks in working with a lender. Let's say I'm trying to win a listing appointment now.
Okay.
So we're gonna flip the script and we're gonna talk listings for just a moment. And I'm trying to win a listing appointment. What I'm going to do is when I'm at that consultation, when I'm at that strategy session with those sellers, I'm going to have Jess, before I go, leave a voicemail for me. So I'm going to say, Jess, I'm going to the Smith's house. Their house is in Westminster, and it's worth about $700,000. I'm hoping you can provide some insight for my sellers. Jess is like, I got it. So Jess calls you, leaves a voice message, and says this: Erik, I know you're meeting with the Smiths right now with their home in Westminster. I wanted to let you know that I scoured our database, and we currently have 120 buyers looking for a property that is almost identical to theirs. And so know this, that when you take that listing on, I'll be intentional on marketing to our database, as well as I know you'll be intentional on marketing to yours.
Oh, I love that.
Okay. So now what you have, and I stole this from Sharon, who's the president of Real, the brokerage that I'm a part of.
Cool.
When you have that, if you have an ISA team, they should be doing that same call. When you have a great lender relationship, they should be doing that same call to show that this is a cohesive relationship. Jess, give me your thoughts on that outside of just adoration.
Yeah, I mean, I think our team, we are doing about 20 pre-approval appointments a week for our business partners. And so we're pre-approving these folks, and we've got a limited amount of inventory. So that's a really easy thing for us to pull up. Here's all of our clients that have been pre-approved. And we could even share data if we needed to with our business partner to take with them on their listing appointment or something like that. So I absolutely love that idea. I think it's great.
So the base of where Sharon went with that is he said, you know what every seller needs? Don't overcomplicate it. Every seller needs a buyer.
Yep.
What does every buyer need? A buyer needs a house.
Mm-hmm.
And so we tend to get way more complex in trying to do these things. And I think this idea of simplification is huge. Now, on that same vein, Jess, let's say that you have a realtor and a client that are in a multiple offer situation. Do you think the lender should be getting involved in providing clout and credibility for that seller and for that seller's realtor? And if so, how so?
Oh, that's a great question. So one, I think that the lender and the agent, the buyer's agent, should be working together to go through the contract and the terms of the offer. Because again, if I can see that there's zero impact on cash to close for my client and they're comfortable going up $20 a month, let's just waive all the appraisal deadlines and take our offer to the next level. So I think the lender and the buyer's agent should be formulating that offer and those terms together. And then I think what my agent partners do is they will BCC or CC me when they send the offer. And they always talk about me in the cover letter is like, we've closed this many transactions with her. She's a rock star. And then the minute I get CC'd, I know that's my cue, that I generally start with a text just to be respectful of the listing agent. And I've got, a text that's like, hey, my name's Jess. I work at Neo. We wrote an offer on your listing at X, and it's so timely when that offer comes through that, it's just, they know exactly which offer that is because it just came through their inbox. And then I follow up if I haven't received a response to that text message. A couple hours later, I might just say, hey, let me know if you want to set up some time to chat. So I definitely stay, right there with my buyer's agent because it's a relationship game. Being able to win over the listing agent and being able to secure the contract for your buyer it's so relational between the buyer's agent and what they're doing with the listing agent and what the lender is doing with the listing agent as well. When we got into 10 to 15 offers in our market, listing agents were overwhelmed and they couldn't talk to every lender, and rightly so. So I think it's really important that you have a very beautiful pre-approval letter. I've got a really impressive lender package that talks about my accolades and talks about what we do on every loan file before we'll write a pre-approval letter. And I can send an example of that if anybody's interested. But I think it's important that you just have a very tight process, that you're an addition of why that buyer's agent is going to win that offer for their buyer.
Jess, it's fair to say that if you have a relationship with that listing agent because you're a high producing lender in the Denver area, you're quick to reach out to them and lean on the clout that you've earned in previous deals. Yes,
for sure. Yeah, a lot of which I will pull up a house in the MLS and I know the listing agent like at least 20% of the time, which is great because I can say to my buyer too, we're in a cycle of margin compression right now where there are people giving loans away and it becomes kind of a pricing war, unfortunately, right now. And so for me to be like, oh, I know Jason, he's the listing agent on this one, and I'll give him a call and he will be transparent with me about information that he has related to offers. It just also helps kind of keep the cohesive deal between the buyer's agent and myself together so that we're not losing the loan to Quicken or something like that. And now I leave my buyer's agent with a lender they're unfamiliar with. So that helps too.
I want to end with this, Jess, and then I want to welcome your thoughts as well. Remember, every seller needs a buyer, and that's what we're talking about today is how do we tee them up? And we have to understand the psyche and the mindset of where sellers are at. Zillow did a study years ago on the biggest stressors that sellers face, the things that are the most undue amount of pressure on them. And I think we as realtors will quickly respond and we'll be like, well, it's price. That's the thing that worries them the most. But price was number 3 on the list.
Wow.
Number 1 was uncertainty. And number 2 are interruptions. Now, I don't think that interruptions are necessarily the relationship that we have to worry about with our mortgage lender. The interruptions are how many showings are there going to be and when is their life going to get disturbed from the normalcy that they were so craving. But it's the uncertainty that is riddled in that offer. Who are the buyers? Are they actually good for their money? Does this lender know what they're doing? Can they close on time? Is there going to be any oh craps? And a mitigation of the oh craps is a super important piece in all this. And so when you have a great partner in the right lender and you can strategize together and you get 2 for the price of 1, my gosh, understand this, that at least in my market, a lot of realtors don't like me. A lot of lenders do, and if that lender can go and make the call, and they can connect with that listing agent and say, hey, we have a great offer coming over from Erik's office. It's going to be wonderful, right? And we have it taken care of. You're taking that uncertainty and that heightened level of anxiety and you're lowering it a little bit. And so when you can lean on those and understand that our job is to not just get the highest dollar. Yes, that's still going to matter, but our job is to mitigate the uncertainty that our sellers are bombarded with. And a great partnership with the buyer, the lender, and the realtor make for a perfect trifecta. So Jess, I welcome your final thoughts as we look to wrap here.
Yeah. So on that note, just real quick, I think that I always explain to my clients that what every seller has in common is they want the highest price. But I also think that the other levers I went over are equally as important. So I think you can actually write an offer that provides a seller certainty that isn't necessarily the highest price. It's about writing the strongest offer. So are you encouraging your buyer to, I'll get my client's loan approved in their inspection period so they feel comfortable making their earnest money non-refundable right after inspection. Like that's just basically the seller can start packing up their house a week into the contract, right? And so it's like just purposefully removing the certain uncertainty by the seller and putting the risk on the buyer, but then my team and myself and the agent creating certainty around them through a process that is tried and true. We do all the time and we make them feel safe. and we're putting more certainty on the seller. So I think it's how you also strategize that offer together to make the seller say, okay, that one's $5,000 lower, but I can pack up my house. I know it's going to close. And I think that's what we go for as a team.
I love it. Folks that are listening and watching, I want to give you a couple of things. Number one, she didn't ask me to do this, but I'm going to do it. Jess can do loans in almost every state. I think you said 44 of the 50. Is that right?
46.
Oh, 46. Pardon me. Oh, sick
Yeah.
little flex there. And so if you are looking for a great mortgage partner, I get nothing from it. I just think Jess is absolutely a 10 out of 10 with how she treats people and the work that she does to service folks. So if you're interested in that, feel free to reach out to me or to Jess. We're easy to find on the interwebs. The next thing is, gang, we have something called LST, Live Sales Training. It is our newest product that we're launching, and you get to do it for free for 30 days. We are giving you twice a week in person, highly accountable, massive amounts of training that are going to help you to get your next deals. So if you're looking for that little gasoline on your fire, please sign up for LST Live Sales Training. Go to realestatelivesalestraining.com to learn all about that and to sign up for your first 30 days for free. There's no long-term commitment. You can bail at any time. If you're like, these guys are a bunch of yahoos, I'm not interested, then just get the heck out of Dodge. I also want to tell you that we are doing a ton of value content. So we're going to continue to pump out webinars and podcasts here in the next weeks to come. And so if you're looking for any sort of value, make sure you hit that subscribe button. If you're watching here on the YouTubes, if you're watching live, be sure to keep on signing up and we'll keep on bringing value. On behalf of Jess Uphoff, I'm Erik Hatch out of Fargo, North Dakota, wishing you well. Jess, thanks a ton. Always appreciate you.
Thank you for having me. Thank you.
All right, be well.
Okay, bye-bye.